Hi, do you see those colorful charts that constantly flash in movies about finance? Or maybe you've heard a story about how people make millions just by looking at a screen. Today, I want to show you what it really is and how to make money from it and live off the market, even if you've never done it before. What is trading and where is the best place to start? Trading is the buying and selling of assets with the goal of making a profit. Imagine a situation where, for example, you bought an apple today for 10 rubles and tomorrow it's already worth 12 rubles. If you sell that apple, you'll earn 2 rubles. In trading, it's exactly the same, only we trade stocks, currencies, and cryptocurrencies. The main rule in trading is to buy low and sell high. With a merchant, it's all clear, right? He comes to the market and starts trading his apples. Where does a trader go? A trader goes to an exchange. An exchange is a place where buyers and sellers meet. It's the same as a market, but he can't just show up and start trading right away. He needs an intermediary. The intermediary will be a broker. A broker is your representative who helps carry out your orders for a small commission. To decide on a broker, it's very important to know that they have a license, to know what their commission is, and to have a user-friendly platform. Registering with a broker is the first step to earning. For myself, I chose Tiger.com. In addition, Tiger provides its free trading terminal and works directly with top crypto exchanges. Go to the official Tiger website, click Products, select Tiger.com broker, then click Register, enter your email address and create a password. Click Continue, select Tiger X as you can save up to 45% on commissions here. There's also a single interface here without switching between exchanges. Select it, then we go to our broker account. Here we need to click Not Verified, here Pass Verification. Here we need to enter our data. After filling in all your personal data, click Continue. Select Continue on this device, check the box, I consent to the processing of personal data, continue. Next, select the country of issue and the type of identity document. I choose passport, I set Russia, here we photograph the passport and upload it here. After we have submitted all the documents, after a certain amount of time, a green check mark will appear in our verification indicating that it is verified. That's it, you can now go to your wallet and fund it. In addition to having its own terminal, Tiger is also an official partner of exchanges like Binance, Bybit, and others. Want to conquer the markets with the best tools? Choose the solution that's right for you. Trade on the top exchanges with our platform for Windows or macOS. Increase your profit with a program that returns up to 35% of the commission from trades. The trading terminal is where a trader spends most of their working time. Now I'll show you how to download and install the program you'll use to make trades and see the charts. Go to the official website, select Products. Here, choose either Windows or macOS. In my case, it's Windows. Click Download for free. After it's downloaded, go to your downloads, click on the file, click Install. In every professional field, there's its own professional jargon, and trading is no exception. And before we go on to analyze charts, let's learn the language of a trader. Without these words, it will be very difficult to understand trading. For example, liquidity, how easy it is to buy or sell an asset. Spread, the difference between the buying and selling price. Volatility, how much the price fluctuates. Long, we buy in hopes of a price increase. Short, you sell in hopes of a price decrease. Stop loss, automatically closes a losing trade. Take profit, secures the profit. Now let's look at how a trader understands when to buy and when to sell. There are two types of analysis, technical and fundamental. Technical is when we study charts and patterns. Fundamental is following the news and the economy. Strategies also vary. Scalping, quick trades on minute charts. Day trading, we open and close positions within the day. Swing, we hold for several days, but for beginners, I recommend starting with day trading. Now let's break down these mysterious candles that you see on all your trading charts. A Japanese candlestick shows the price movement over a specific period of time. One candle is 1 period, a minute, an hour, a day. A candle consists of a body and wicks. A green candle means the price went up, buyers are stronger. A red candle means the price went down, sellers won. The larger the body of the candle, the stronger the movement was. Now let's break down the candle piece by piece. Each element tells its own story of the market. Let's take the XRP coin. We can see there's a green candle here. The bottom is the opening price of the green long candle. The top is the closing price. There's also a wick. The wick is the extreme that shows how far the price went. Similarly, a red candle represents a short position where, simply put, the sellers are winning. Here we see that it's the opposite. The price opens at the top and closes at the bottom. A large body means a strong movement in one direction. As we can see, there's both a long movement and a short price movement here. If there are very long wicks, it means there's a battle between buyers and sellers, and this is where it's decided which way the price will go. Well, in this case, we can see that we grew, long wicks appeared here, and in the end, we went down. The sellers won. To trade successfully, you need to understand what makes the price move up or down. Let's take the Bitcoin chart as an example. The price moves according to the law of supply and demand. Here we see that, for example, there was demand here, right? And people started buying. So people are buying, and as we can see, they're still buying, and the price is rising. But look, in 2020, for example, people were also buying, and the price was rising, and then they turn into sellers and start taking their profits and selling. At some point, any seller or buyer switches roles. And that's how the price moves both up and down. The main thing is to understand at what point you need to buy a certain coin. Excellent, now you know the market's mechanism. Let's test your knowledge and move on to patterns. If a lot of people want to buy Bitcoin, what will happen to the price? That's right, it goes up. If you understood that, you're already ahead of 80% of beginners. And now for the most interesting part. I'm about to show you the patterns that professional traders use to find entry points. It's like a cheat code in a game. You see the pattern, you understand the direction of the price movement. Write in the comments which of the patterns you found most understandable. And don't forget to leave a like. It's only going to get better. Let's get to studying the first pattern, the pin bar, which signals a trend reversal. The first pattern every trader should know is the pin bar. It signals a price reversal, meaning, well, a change in trend, for example. Let's take the Ether coin. Right here we can see there was a short trend, and then after this candle, I'll zoom in and show you, a long trend began. In other words, a price change. What does it look like? It's also called a bullish pin bar. So we see a long green wick here and a tiny green body. What does this tell us? It tells us that the sellers couldn't push the price down any further, and the buyers won, pushing the price up. There's also a bearish pin bar. I'll show it to you now on the H coin. It's the same thing here. There's a wick or a shadow, but it's red with a small red body. This means that buyers also tried to push the price further up, but they failed, and the sellers won, bringing the price down. They caused a price reversal. If we see patterns like these, we can confidently enter in the direction of the movement. When the strength of buyers and sellers becomes equal, candles like the Doji appear. Now I'll show you on the chart how this looks on the C coin. Look, we see 3 candles here that have long, almost identical shadows and a small body. There are 3 of them. The opening and closing prices are almost the same. This means the strength of the buyers and sellers has equalized. So we see that the price was rising here, right? In a long position, the buyers were winning and then the sellers crushed them and equalized it. They leveled out the price. After an accumulation of these doji candles, we expect a sharp move, either long or short. And in this case, the sellers won and the price went down. The short movement then continued for another 4%. I most enjoy trading doji candles when there are levels. That is, look, here we approached once, formed a level twice, right? We approached this level again. And at that moment, it happened that we broke through it. I entered right here and exited right here. On average, I got about 2% there. How does it work? That is, we see that here are the stops of people who want the coin to go up, to grow. And here we observe that doji candles also appear 1, 2, 3, but they are very close to the level. That is, if we go below this level, most likely there are stops of participants who want the coin to grow. And at this point, it turns out that we see a candle that has almost no body and almost equal shadows. And then I make a decision to enter a sharp position and break through these very stops of buyers, they are standing here. Well, there's a nice cool movement of 2.7%. Yeah, well, on average, I managed to close somewhere here. Well, approximately 1.5% to 2%. When one side completely defeats the other, patterns such as engulfing are formed. There are 2 types, bullish engulfing and bearish. Now, I'll show you on the chart what this looks like for the sum coin. Here we see that sellers are in charge here. Yes, the price is falling, and here a bullish candle appears. Yes, which is completely absorbs the previous one. That is, the minimums are lower, the maximums are higher. And here sellers are already starting to rule and the trend in Langs is changing. In bearish engulfing, all the accuracy is the opposite. Now I'll show you what it looks like for the SOL coin. That is, we see here that a long trend has been set here, yes, and then the red candle completely eats up the previous green one, Langua candle. Here the maximums are higher, the minimums are lower, and here the chart trend continues, and here the sellers are in charge. The most reliable signals on the market are given to us by 3 candle star patterns. There is a morning star and an evening star. Let's take a look at the evening star on the Pengu coin chart. That is, we see that we are growing, growth is actively underway. Here a candle of uncertainty appears, then a red candlestick. Here the sellers are already winning, and we are reversing the price at this point of the chart. That is, the sellers have won in this situation. Next, let's look at the SOL coin. Here we have a morning star, meaning we were actively falling, and here again a candle of uncertainty appears. Small body, here a reversal occurs, and buyers are already winning and we begin to grow. This is the SOL coin. Now let's move from theory to practice. How would I work out patterns? Where would I place stop losses and take profits? Let's open the chart for coin C. Here we see we are looking more precisely for patterns that can help us in order to find deal. Well, I already showed you, yes, there are some very beautiful doji here, which make you want to go straight into the charts. I have a stop loss. If I were to place it behind this shadow, behind this wick, it would be somewhere around 0.77, 0.80%. If I went into the charts and fixed somewhere, I would be around 2%, that is somewhere around here. I would have gone in, and if the deal had gone, for example, not in my favor, I would have given it away, somewhere around 1% of the amount I entered. But in this situation, the deal would have worked out completely, and you would be able to earn 2% on your deposit. Well, the most important thing in trading is risk management. In trading, it's not how much you earn that's important, but how much you don't lose. Lose, especially for beginners. Remember the most important rule, 2% of your deposit per trade. For example, if you have $1,000, the maximum you can give up on one trade is $20, which is 2%. Always use a stop loss, because sometimes people get carried away by their emotions and they remove their stop losses and lose much more than they planned. Even better, start trading with a demo account. Practice without money to get the hang of trading. And remember that even traders with a lot of experience also make mistakes. The main thing is to keep yourself in check and control your emotions. We've only covered the basics now, but this is just the beginning of the path to mastering trading. Study additional indicators, master fundamental analysis, and write down your own trading system. The main thing is not to stop your learning. After all, trading requires a lot of discipline and development. So, now you know how to read charts correctly, how to analyze candles, who is currently in control of the market, buyers or sellers. All of these are key elements for successful trading. But to do all this effectively, you need the right platform. Thank you so much for watching this video to the end. I want to ask you to subscribe to the channel, give it a like, and hit the notification bell so you don't miss new videos. Also, all the relevant links to download the terminal for the broker and social media will be in the video description. See you next time.